Love the payment before you love the house. What's going on, guys? My name is Minh with What's a Mortgage. Welcome to our channel. The goal of our channel is to educate, empower, and to connect you with the right mortgage. Tonight is Q&A night, and tonight we're going to ask two very popular questions. The way Q&A works on What's a Mortgage, as I talk to consumers through Messenger during the week, I take the most popular questions and I answer it. Right? So tonight we're going to answer two most popular questions, and tonight's two popular questions is, should I come in with 5% down right now or wait till I have 10% down? The second question, should I buy with a smaller down payment or buy with a larger down payment? What's going on, Harold? How you doing? How you doing, Roshan? Hopefully you guys are having a great night. But tonight we're going to answer those two questions. They sound very similar, but different. All right, so guys, tonight we are going to get into that. So guys, of course, as you're saving money for your down payment, this hopefully answers that question for you, right? Best thing I tell people to do, the best thing to do, if you're confused on the smaller down payment, the bigger down payment, the FHA or the conventional, or should you go 5% down? Should you do down payment assistance? The number one thing you should do is run the numbers. When I use the word running the numbers, which you guys hear me say it all the time, I'm talking about running the numbers for your mortgage payment to see what payment makes sense to you. Running the numbers to see what you qualify for, and also running the numbers to see, is the juice worth the squeeze? Homeownership is not for everybody. Sometimes it's better to rent. Yes, I said that. Even though I do mortgages, sometimes it is better to rent. But the best way for you to tell if it's better to rent or not is to run the numbers. You have to look at how much you're paying for rent, how inflation's moving. Is it worth renting for a long period of time? Are you moving further and further away from where you love to live because of inflation? Or does rent stay stagnant in your area, which can happen? That's why the best thing you can do, either to rent or to own, run the numbers. Bigger down payment, smaller down payment, run the numbers. All right, guys, hopefully that helps you guys understand that, hey, everyone's situation is different, and the best thing you can do is just see the numbers for yourself. All right, guys. Also, this channel is an interactive channel, so ask a lot of questions. If you have any questions regarding home ownership, tonight's the night to ask. If your lender's not answering your call, or you want answers, but you don't want to talk to a lender and you don't want to talk to a realtor because you don't want to get sold, right? Tonight's the night to ask. So please, if you haven't subscribed, turn the notification button on, or the subscribe button on, so you're notified every time we post new content. And also, let's interact. All right, guys? So let's answer these questions. Question number one, let me do it again, right, is, should I come in with 5% down now or wait and save for 10% down, right? And the second question again, should I buy with a smaller down payment or a larger down payment? Let's run the numbers and find out. Let's look at here. On a 450 purchase, all right, we did three different scenarios. If you have a specific scenario, message us and we'll go ahead and send you that scenario, right? You can always call us at 714-790-9697. You can call us, you can text us, or you can message us on Facebook, or of course on Instagram, all right? Of course, if you're on YouTube, you got to call or email in, right? info@whatsamortgage.com, or send us a text, all right? Let's look at 450 here. 450, 720 credit score with an interest rate of 2.75, 5% down, monthly PMI rate, 10% down, monthly PMI rate, right? And with a 3% annual inflation. So right now, if you have the 5% down, you are going to buy at 450. The 5% down would be 22,500, right? This is just a scenario. I am not quoting rates. I just want to show you numbers so you can see what to look for, so you can make the best decision for you and your family, right? So 5% down, 450 purchase. The down payment is 22,500, right? The principal and interest, 1,745. Right? The property taxes, it shouldn't change if you increase the down payment or drop the down payment, right? So property taxes, 468. I use 1.25% rate for property taxes. If your area has lower property taxes, the payment could drop on taxes. If your area has higher property taxes, it would go up. The PMI, $188.81. And the hazard insurance is $56.25. So the complete mortgage payment on 5% down or 450 is $24.59. Okay, so now we know what it is 5% down. And let's look at 10% down. Okay, and that's why if you're contemplating, definitely have your lender send you the numbers. Here's 10% down, 450 purchase price. The down payment now is $45,000. So remember, if you increase the down payment, $25,000. So what I would do is I would make a note of that extra $22,500. So you're coming out of pocket $45,000. Okay, your mortgage, your principal and interest payment is $1,653, right? Not even $100. You change your down payment by 5% more by $22,500, right? Your taxes are the same. Your PMI dropped just by like $70 there. Your hazard insurance about the same, $56.25. Your new mortgage payment is $22.89.76. And this is where you add up all the numbers, right? So the difference of down payment is $22,500. Okay, so when you're comparing what's best, right, is $22,500, right? The principal and interest is a difference of $91. Your PMI is $77, right? So the difference monthly is $169. So when you're deciding, do you want to come out of pocket $22,000 to save $169? If you want to find out how long it takes to recover, right? Let's say if you decide, let me do some math here, 22,500 divided by 169, it would take you 133 months. If you decide to come out of pocket 5% down, right? But you're saving 22,500, right? But your payment's $169 higher. After 133 months, you will see the reason why you came in with a bigger down payment, or with, right? So if you stay in your loan for less than 133 months, right? If you stay in your loan longer than 133 months, then 10% down was a better deal. If you stay in your loan under 133 months, you're actually saving more money going 5% down, right? You get to save the extra $22,500 every month. It's an extra $169, right? That makes sense? So when you're looking to purchase, that's a question you need to ask yourself, right? Should you buy with 5% down with the payment of $100 with an extra $169, or should you come out of pocket $45,000 to save $169, right? So that answers question number one. That answers one of the questions, right? Should you buy 5% down or 10% down? Only you would know. And I'm not here to give you a direct answer, but here I put the numbers in front of you, right? What's more important to you, right? Saving yourself $22,500 or saving yourself $169 a month? Only you know that, right? I feel if it's a long-term investment, I don't see anyone that I know stays in their first loan for longer than 3 to 5 years. That's just me. But if you decide you're gonna stay there over 133 months, maybe the bigger down payment's for you. You know what I would do with the extra $22,500? I would go 5% down. I would save that money, right? Because you don't know when you buy a house, unless you have that much money laying around, right? What do you need? What happens if you need that money for something? You already tied it up in your house and you want to pull it from it, right? It costs you money to refinance and pull from it. So it's up to you. What you can do is, if you feel after you move in, for me, after you make 6 mortgage payments, I would take that $22,500, dump it into the principal, and drop the payment, right? That's what I would do. I want to make sure I'm comfortable first before I drop in that bigger down payment. And they can recast the loan and drop your payment, right? Which means you buy your house $450, you do $22,500 down, right? Once you make 6 payments, you can drop in the other $22,500. It will drop your mortgage payment. They can recast your loan, right? I think you can do it one or 3 times throughout the duration of the 30 years if you do a 30-year fix. Okay, so only you know that. Or what I would do, if the savings is $169 a month, if you have no debt, great. If you have debt, I would take that $22,500 and eliminate the debt I have, right? What happens if you have a car and the payment's $500 a month? I would take that 22,500, pay off that car, and you have that extra money, right? That's what I would do. But everybody's different. If you feel like 10% down for you, but now at least you can tell, hey, I'm gonna come in with an extra 22,500, but I'm gonna save 169 bucks a month. Okay? Hopefully that answers that question. The second question, right? Should you buy now or wait till you have the 10% down? Let's say you have the 22,500 right now. You can buy 5% down right now. Well, I want to save for a bigger down payment. Let's say you save that 10% down. You can see the payment changes 169 bucks, right? But how much are you saving to save that extra 5% down, that extra 22,500? If you can save it in 1 year, remember, in 1 year, the house right here, that's why I did 1 year inflation. Someone asked that inflation question. So every year, homes go up about 3%, right? Annually, right? Historically. Of course, in California, it does go up more, but historically, it goes up 3% a year, right? Yes, there are seasons when you dip, but overall, net, throughout the history of real estate, it's about 3% a year. You have to, there's also dips, but without these dips, right? If you just take out the anomalies, you have a 3% increase a year. So if it takes you a year to save 22,500, you're losing 16,500 in equity already, right? So if you're trying to save 22,500, remember, you just lost 16,500 as well. And if it takes you 2 years to save it, in 2 years, you would lose $33,000 in equity, right? You're saving an extra 22,500, right? But you lost 33 grand in equity. That's $11,000 you would lose, right? If it takes you 2 years. So what does that tell you? If you can't save that money within the first year, it might not be worth it, right? Because if it takes you a year to save an extra 22,500, but you lost 16 grand in equity, you're still in the positive, right? But if you wait 2 years, you're actually upside down. A lot of people don't know that. And think about this. If it takes you 2 years, right, to save that 22,500, you're saving $1,000 a month for 2 years. That means you have to do 2 years of sacrifices for $1,000 a month to save $169 a month. Does that sound crazy? I'd rather pay the $169 and save myself $800 a month from saving money. Some of you guys, their mind just blew up. Like, oh my gosh, I didn't know that. Trust me, I'm a loan officer. I run the numbers all day long, right? But I'm just shelling out numbers. But when you sit there and you break down the numbers, right? Like I said, DJ Quick or Q-Tip said, if it don't make dollars, then it don't make sense. You see, guys? So those answer those two questions. Well, of course, that's at 450. How about the big ballers, shot callers, right? Let's go 550 here. Okay, let's go 550. Are we at 550? Yes, 550 here, right? Same rate, pound for pound. Of course, you go 10% down, the PMI is lower. 550. The down payment is 27,500. Principal and interest. You see the total payment is $3,005, right? But now you want to go 10% down. It's going to cost you $27,500 to save $206 a month, right? If I take the 27,500, I divide that by 206, 133 months. Do you guys get the hint? I'm going to answer everybody's questions after I do the last scenario, right? If you have questions, I appreciate your patience. Bring them on. But as soon as I answer all these, go through the scenarios, because some people are buying in the 4, some people are buying in the 5, some people are buying the 6. If you are buying below 450, I do apologize. I didn't have enough time to make all the slides. But if you reach out to me, I will send you your scenario and your numbers, okay? So unless you have a specific scenario, reach out and I'll send that to you as well. So here, 550, right? So 27, you're gonna go. So would you rather buy 5% down right now at 27,500, or would you rather add an additional 27,500 to save $206 a month, right? End of the day, you're in control, but at least now you know the numbers. That's why you definitely need to talk to a lender, right? To find out the answers. Also, if you decide, hey, I want to go 3.5% down FHA, I want to cover my own closing costs or take a higher rate to cover my closing costs. What's the best deal? The best thing you can do is run the numbers, right? So on this 550, if you buy right now, you're buying at 550. You wait a year to save 16,500, right? Or to save 22,500. That's 16,500 right there. You see that? 2 years, it takes $33,000. Guys, definitely run the numbers. Is it worth it? Right? Remember, how fast are you saving money at? Right? What is your pace in your race for down payment? If I feel like if you can't save that bigger down payment within the first year, if you wait year after year, it gets pricier. Also, you know what I didn't take in consideration, I didn't put on here? If you bought this house, this 550 house, 2 years later at 583, at 10% down, it's not going to be 55,000. It's going to be 58,300, right? So you're actually going to come in with a bigger down payment for 10% down, right? So definitely you need to ask yourself these questions, because think about at 550, right? You're coming in 55,000. You wait the 2 years, 583, right? So you're gonna come in with an extra $8,000, right? So definitely it might take you 8 more months to save it, but we'll see where house market's at, right? Or you won't know where it's gonna be at. So the longer you save, you're more in the unknown. But definitely only you know what's best for you, and the best way for you to find out is to run the numbers. All right. So next one, 650 here, right? So let's look at 650. Same thing, 650 right here. Okay. So if you look at the 650, you look at here, a lot of guys, you can afford the payment, but the biggest the hiccup right now is the bigger down payment. And that's why probably everyone's asking me this question. So 650, 5% down, 32,500. Okay. Look at the payments, 3551. Right? If you're renting a house for 650, or you're renting right now, or you're in that range, 3551 for a 650 house is amazing right now at 5% down, right? So would you rather save yourself that extra 32,500, or would you rather come out of pocket 65,000? The difference of payment, $244. Only you know. Let me do them again, math again. If I take the 32,500 divided by 244, 133 months. So 133 months divided by 12, that's 11 years. If you keep that loan for 11 years or more than 11 years, you're overpaying on the 5% down. But if you keep it for under 11 years, which most people do anyways, right? Unless you're like, hey, I'm in it to win it, I'm never going to refi, I'm never going to move, then maybe the 10% down long-term after 11 years, where you will see the benefits, right? It's not always a win to come in with a smaller down payment. It all depends on your short-term goals and your long-term goals, right? What are your goals? Also, when you're coming in to buy this house, did you pay off all your debt? Right? I would keep that money in my side pocket. It's just me. What happens after year 1, year 2? Debt accumulates somehow, but at least you had that extra money. I hear people say all the time, I'm house rich, but pocket poor, right? There's debt you can eliminate. If you have no debt and you don't plan on taking out any debt, put that money in there, right? What I would do with that extra $32,500 besides paying off debt, you don't have it, max out your 401k. You have your house. Let equity, let time build your wealth as you make mortgage payment, right? Let your wealth be built by equity, not with you taking all your hard-earned money, right? But some people, they want that safety. They want that security. Only you know what's best, all right? Also, let's look at year 1 inflation. If you wait a year to chase down that money, right, the extra 32,500, you're going to lose 20 grand. You wait 2 years, 39 grand. So as we can see, if it takes you 2 years to chase that bigger down payment, you're really losing money. And remember, it's 10% down the new appraised value, right? So let's say 650. If you wait 2 years, you're buying it almost at 690, right? So for $4,000 more, you're gonna come in with that money, right? And you're up, and you have less equity, right? So definitely, guys, these are the answers. These are the questions people ask all the time, but now you know the answers. But the best way for you to find out what's best for you and your family is to run the numbers, right? So when you run the numbers, you'll know what's best. Definitely, hopefully tonight, the 2 most popular questions were answered tonight. So if you do have more questions, please go ahead and ask. All right, here's the time to ask. What's going on, guys? Let's go up, scroll up right here. Denise Stelindius, what do you think about cross qualification? First of all, what's a cross qualification? A cross qualification is when you have been approved by a lender, you go out and you write offers on that property, and the selling agent has a mortgage lender. They want you to cross-qualified. That means they want that other lender, not your current lender, to review the loan to make sure you are qualified to buy. The reason why they're doing that, they don't want someone to write an offer on a home and that person's not qualified, right? I see a lot of people fall out of escrow or close late. So I understand why the agent, the seller agent, want you to do a cross qualification, right? They don't want to put someone in escrow and they fall out of escrow. So I can see that. What do I think about them? I think it's fine. I would send the other seller, the cross qualified lender, a copy of the DU, the desktop underwriting, copy of the assets, and maybe some pay stubs and bank statements, right? So definitely, I think it's fine. I would not let the cross-qual person run your credit. Like I said, I would send a copy of the DU, copy of the pay stubs, copy of the bank statements, and you should be good to go, right? It's not a big deal. If they're asking to run your credit, I would be very leery. It's not worth them running your credit. All right. Hopefully that helps you out there, Denise. From Facebook, Livington, I have about $20,000 to $25,000 for a down and a credit score about 630. What's the best program loan? Conventional. If you have below a 720 credit score, I think, and you could run the numbers, an FHA loan will have the cheaper payment. So if you're chasing the cheapest mortgage payment and you're purchasing a home, if you have above 720, conventional will have the cheaper payment. If you go below 720, if you're chasing the cheapest payment, FHA will be the cheaper payment. Hopefully that helps you out there. See here, Ariel, what is inflation? Inflation is when something inflates, right? So when homes, they say the rate of home inflating, homes going up in value, right? Inflating is going up, deflating is going down, right? The average inflation in the United States is 3%. The average inflation for homes to go up in value every year is 3%. Of course, this was a freakish year where things shot up. They said about 10%, but historically, inflation for homes is about 3%. So every year you don't wait to buy a home, it goes up in value about 3%. Hopefully that helps you out there, Ariel. Imelda Garcia, do you recommend purchasing a condo townhouse? I would buy a townhouse over a condo. The reason why, if you buy a townhouse, they consider it like a single family home. Even though you have HOA on a townhouse, the rate is the same thing as a single family home. If you buy a condo, non-FHA, conventional, the rate is higher. Also, if you buy a condo, if it's not FHA approved, you can't go FHA. Now you have to do a spot approval, which might take an extra couple weeks, right? Also, if you're buying a condo and it's going conventional, if it's not warrantable, right? There's a HOA questionnaire for condos. If it doesn't pass, right, now it's non-warrantable, you have to come in with a bigger down payment. If the condo does pass, it all depends. But if you want the road to less resistant, go townhome over condo. All right, hopefully that helps you out there. Victoria, how does PMI work? Can you get it without 20% down? If you're buying a house, Victoria, and you're going FHA, you will have PMI no matter what. There's upfront PMI and there's monthly PMI, right? PMI is there to protect the lender in case you foreclose. If you're going FHA, there's a reason why you're going FHA. You're a higher risk. That's why they charge upfront MI and monthly MI. And on an FHA loan, unless you're going 10% down, after 11 years, your PMI will fall off. But if you don't go 10% down and you go FHA, the only way to get rid of PMI is to refinance out of it. If you go VA, there's no PMI. You served our country as a veteran, that's your perk. If you're going conventional, right? Remember, you are not putting 20% down. You are a higher risk because of the lower down payment. So that's why they charge PMI to protect themselves in case you foreclose, right? So with PMI, there's something called lender paid MI, which means you take a higher interest rate and you will not have PMI because you have a higher risk. That's why you have to take a higher rate. And with that higher rate, the lender will pay your PMI. You can do single premium PMI, which means you pay it all up at one time. So it doesn't matter if values go up and down or down, right? You won't have PMI. Or the third way, make monthly PMI payments. And once you have enough equity, you can either do an appraisal, get rid of the PMI, or refinance and get rid of the PMI. But the PMI, private mortgage insurance, their main goal is to protect the lender from you foreclose or not making payments, right? If you don't make payments, they foreclose, the insurance companies will pay the money that the lender loses. All right, hopefully that helps you out there, Victoria. Gus Lucatero, great question. Would you recommend doing 3% down with FHA? First of all, FHA is 3.5% down. I think what you're trying to ask is, should you do 3% down conventional or 3.5% down FHA? If your credit score is under 720 and you're doing 3% down conventional, your payment will be higher than FHA. And that's if you're chasing the cheapest payment. If your FICO score is under 720, FHA, your payment is better. But over 720, if you do 3% down, your payment is better on conventional 3% down than FHA 3.5% down. But if you're under 720, but above 700, if you go 5% down conventional, your payment is cheaper on conventional than on FHA. Hopefully that answers your question. Valerie, should I pay my student loans with the money I have saved or buy my house first? Valerie, what I would do is this, right? I would go out and qualify for my home. If you qualify for a home that you can swallow the payment, right? If you can buy a home and swallow the payment, I would try to buy first, rent out a room, save that extra, use that extra money, pay off your student loans, right? If it takes you 5 years to pay off your student loan and inflation goes up 3% a year, by the time you pay off that student loan, the cost of that home, that mountain just got bigger. But of course, if you can't qualify to buy with the student loan, pay the student loan. But what I would do first is qualify with my student loan payment, right? Or if you're in income-based repayment and you're going conventional and the income-based repayment is zero, they hit you with $0. What I would do is buy conventional, do income-based repayment, hit you with zero. Once I buy it, take your student loan, get it out of income-based repayment, rent out your room, and take that money and pay off that student loan. That's what I would do. Hopefully that helps you out there. I gave myself some good idea. I wish I could go back in my 20s and give myself that same idea. From Facebook, Elmas Cabron, I have put in several offers, but have lost due to not wanting to remove appraisal contingency. Is there a way around moving the appraisal and not having such a risk? And the answer is yes. There's 3 contingencies when you're trying to buy a house: home inspection, appraisal, and loan contingency, right? If you waive the home inspection and you waive the appraisal and you don't waive the loan contingency, you can get your deposit back. Why is that? If you cannot get your loan approved from whatever reason, let's say the home doesn't appraise and you don't have money to come in with the difference, then the loan cannot be approved. Then if the loan cannot be approved, as long as you don't release your loan contingency, you can get your deposit back. So you're protected under the loan contingency. All right, hopefully that helps you out. Great question. Jenny Nguyen, currently in escrow, is it possible to decrease the down payment before closing? Yes. What you want to do, Jenny, tell your lender, I want to go with a lower down payment. Can you do me a favor? Can you update my approval with the lower down payment? Make sure I still qualify. If they say yes, then you can. If they say no, then you can't. So if you're in escrow and you want to decrease the down payment, it's perfectly okay. All right, hopefully that helps you out. Manuel, do you happen to know if programs like Freddie Mac Choice Renovation can be stacked with the GSFA? Most likely not, because I don't think right now, I know for sure renovation loans will not sit behind down payment assistance, right? So I would not recommend it. I don't think they even do them right now. What I would do, Manuel Morales, I would buy with a GSFA. Oh, if you're Platinum Select, you would close with the Platinum Select, right? And then refinance. You can refinance with the renovation loan, Manual. You close with your GSFA Platinum Select, so you get that money waived, and then you can refinance, right? Remember, they'll go up to 110% of the new appraised value. Just wait 6 payments, then do it, all right? Hopefully that helps you out, Manual. That was a good one. I'm surprised I solved that one off the top of my head. Since they are both Freddie Mac, Manual, just close escrow, wait 6 payments, do a renovation refinance, and you can get your money to fix your house. All right. Advice for military first-time buyers in California: get it. Definitely find out where you can cap your property taxes. If you have a disability or something like that, find out if your property taxes can be capped at a certain rate. All right. But if you buy California, I would buy now, right? Because rates are like in the low 2s right now, 100% financing, right? Okay. My advice to military: go with the smallest house first in California, since they appraise so well. After you buy it, wait a year, 2 years, convert it into a conventional loan. Then your VA gets reestablished, your benefits. go out and buy another VA 100% financing, wait a year or two, but you always have to look like you're upgrading because you can go from a 4-unit or to a 2-unit to a small condo to a small single family home to a bigger one. Now you have a portfolio of homes, but make sure when you buy that property, you live in it for at least 1 year before you rent it out, right? So definitely do that. So that's my advice to you, Manny. Guys, that is all I have for tonight. Hopefully you guys enjoyed the Q&A, and we want to end all our live streams, all our episodes with our attitude is gratitude. Without you, What's a Mortgage? There is no us. So I want to thank everybody. Guys, even if you're using another lender or a realtor that I don't know, that's fine. The last thing I don't want you to do is I don't want to watch because I'm not using him, right? Watch and ask questions, okay? If I'm buying something, I want certainty. So I make sure I watch and I ask a lot of questions on the influencers I follow. All right, guys? Enjoy the night, and I will see you guys Monday. Remember, Monday, 9 p.m., I'm going to show you how to use a mortgage calculator. And I have my boy update his calculator so all the numbers are updated. So check out Facebook, YouTube, 9 p.m. And guys, remember, subscribe. Have a great night.